It's about that time of day again, folks. Welcome back, welcome back. Joseph James here. I got my good old friend Marty Errico from Traders Audio alongside me here. Marty's got his feet on the ground on the NYMEX exchange. Don't forget, Marty over at Traders Audio, they do a broadcast every morning at 8:50 a.m. And of course, my name is Joseph James. I'm from SchoolOfTrade.com, and I'll be providing you with a technical approach this morning. This is a very unique and a very powerful way to begin your trading day. We're looking at crude oil and natural gas futures this morning, and we're going from the screen all the way to the trading floor. Starting in Los Angeles with myself. Again, my name is Joseph. I'm here in Los Angeles. I'm a technical analyst. I'll be providing you guys with a top-down approach this morning looking at crude oil futures. I'm going to analyze what happened overnight and what's been happening over the past few hours. And of course, I'm going to try to anticipate the direction at the open. See, I know that if I start with the slowest time frame first, moving my way down to the faster time frames, looking at what happened overnight, because that's going to tell me what is the likely direction at the open this morning. If I can find the direction, then I can use those slower time frames to find those high percentage trading opportunities, which will get me started trading as early as 8 a.m. Eastern time this morning. So we got a pretty good plan this morning. Start with a slower time frame, move to the faster time frames, try to define direction. And by finding direction, it's going to put the odds in my favor, because then all I have to do is find those high percentage areas, right, to begin looking for trades today. Now, once I'm done with my charts, I'm always curious to see if my buddy Marty is going to see the same thing that I do. You know, Marty's got a very unique way of looking at it. He's got charts in front of him, but he's on the floor of the exchange. And I'm excited to see if Marty's going to agree or disagree with what I'm seeing on my screen. Now, of course, don't forget, go out and see Marty and his partner Jeffrey at Traders Audio every morning at 8:50 a.m. Eastern Time. They do a great broadcast live from the NYMEX exchange. It is priceless information if you're a crude oil trader, natural gas trader. And, of course, the pit analysis he'll be providing us this morning, looking at market direction, intermarket divergence, market internals, those important option prices, and very important and oftentimes elusive or confusing, we've got those pit session trading levels. Why do I say confusing? Because we have to remember, as a new trader, we have different price levels for the screen than we do for the floor traders. There are two different types of trading sessions, the electronic session and the regular trading session. So we'll be listening in to Marty as he looks at the regular trading session, whereas I'll be looking at the electronic trading session. Alrighty, now that you know the plan this morning, we're going to start with the screen, and then we'll move all the way across the country down to the trading floor. Let's jump right in here first this morning. And I want to first start by looking at a slice of the news today. Now, I want to remind you guys that every morning, just before we start this broadcast, I update our trading blog, right, the Crude Oil Squawk blog. And you can get there by going to sidewaysmarkets.com. And when you go to sidewaysmarkets.com, you'll notice there's a link right on the homepage called the Crude Oil Squawk and Prep. So head over there, and that will be where you'll grab all of your charts each morning. All right, I'll update this, of course, each morning with the video that we record, and as always with Marty's notes as well. So you can see all of the notes are there for you already this morning so you can follow along. Looking at the news for this morning, we always want to look and see when the news is and if we have any red star news. For example, yesterday morning at 10 a.m. we had red star news. Tomorrow morning at 10 a.m. we have red star news. But what about today? We have no major news on the economic calendar for Tuesday, July 23rd. We do have just a little bit. We had a little bit here. You can see we got the FHFA house price index. We got the Richmond Fed at 10 o'clock, right? We got some bond and bill auctions here as we finish out the day. And of course, later on today, of course, Marty will be talking about this as well. Later on today, we have the API, the preliminary API numbers, which will lead tomorrow's inventory number at 10:30. So later on today, what is it, Marty? 4:30? I'll let him answer that when he gets on the call. I believe it's at 4:30 this afternoon, that preliminary number from the API, right? From the status report.
Yeah, 4:30.
4:30. Thank you, Marty. Appreciate it. So 4:30 this evening, that will be your API, preliminary API number, which of course is oftentimes the leading indicator for tomorrow's news at 10:30. So looking at today, though, we don't have a lot to work with in the U.S. morning session. Whenever we don't have a lot of news to work with, we always have to remind ourselves that this market could be like a ship without a rudder. It could be bouncing around, going to highs, back to lows. In other words, we could easily see a sideways trading range until we get something to push this price higher or push this price lower. When we have no major news, we know that anything can happen. It doesn't necessarily mean a bad trading day is in front of us. It may be a relatively quiet trading day. For example, when we see a red star news event, we always know that a red star news event tells us, be excited about this opportunity. We've got lots of opportunity coming our way today. This morning, we don't have any red star news. And that tells me that for the first few hours today, I'm going to be keeping a close eye on market personality. If the market personality is very slow and very sluggish, if the volume is below our averages, we need to trade with caution. If we start seeing some good personality, though, we won't need to see any news because for whatever reason it is, participants will be there moving prices around. So remember, everything revolves around that market personality. If we have big blocks of news today, we expect to see some volatile personality. Without the news, it's a variable right now. Right now, the market personality is going to be a question mark, and we're going to have to wait and look for clues as we go forward in our morning prep this morning. Now let's start first with an hourly chart. This is a 4-hour chart of crude oil. And I just want to show you this 4-hour chart because it's going to lead into what will be our hourly chart here up next. Looking at this, you can see we've got some very simple trend lines. You can see we've made some relatively fresh highs up at 108.93. After we made those highs at 108.93, you can see here that we have pretty significantly tumbled off that. We've come off it just about 250 ticks, about $2.50 off those highs. Now, I've got a projected support zone here at 169, and you can see that ultimately there are 3 levels of major support below us. We've got lots of buy zones, you can see, where we'll see supply or demand, entering the market. But I've got support zones here at 104.88, 104.08, and then, of course, 100.69 as we go lower. This leads us to believe we have a lot of room for this price to fall, right? But it might be a little bit misleading. This 4-hour chart is really effective at showing us the big picture. But we are day traders, which means we are buying and selling, never holding positions overnight. I'm going to move now to a 60-minute chart, an hourly chart. And now the hourly chart, this begins to show us a little bit more information that's going to be useful today. If you remember, that 4-hour chart made it look like we had tons of space to free fall. Not so fast on this 1-hour chart. You'll notice here that we had a nice big fresh swing high, and that new swing high quickly created a swing low, and that creates our trading range, right? That creates the trading range. We broke to a new higher high, and now we, of course, have collapsed down into that previous range. So now we know this is our starting point down around 104.08, all the way up to now 108.93. I'm going to use that to find my support levels. I draw my trend line here coming in off the lows. This will give me support. Trend line coming in off of the highs. This will give me resistance. What do we call that, folks? Lower highs, higher lows, price consolidation. We call it a price wedge. What does a price wedge tell me to do? Buy the lows, sell the highs, and be suspicious of the fake out breakout. Buy the lows, sell the highs, be suspicious of the fake out breakout, which means that if we do break new lower lows here, I will not be surprised if it fails and comes right back up. At the same time, we know that at these lows, we are a little bit foolish to be trying to sell. I would rather be a buyer now on crude oil. So for the time being, in the short term, I'm looking for a buying opportunity. In the long term, we're going to have to get price to make a new lower low. And again, that market personality concern that I talked about earlier. If the market's personality is clearly bearish, if we're seeing lower lows, lower highs, if we're seeing both time and price symmetry on our entry charts, well, then we're going to be able to take those trades short. For the time being, though, if somebody said, Joe, you've got to decide right now what direction you're trading, I would assume I'm going to be buying pullbacks, getting long off of this support. Keep in mind, we have support in this range here, and we also have support coming from this trend line. We also have our big money trigger line there acting as support as well. So short-term bullish here on crude oil. Long-term, though, tough to tell right now. We may end up heading lower, and if we do, again, market personality will be my guide. I will be looking to sell short, though, below that 105.74, 105.74. That would be my line in the sand there on this hourly chart. Moving forward now that we know what our anchor charts look like, let's grab a look at some entry charts here. Now, entry charts, this is where we're going to put this is where the rubber meets the road, right? This is where we begin to put this plan into action. And the first thing I noticed this morning is the fact that we have an extended trend here. Now, we talk about this in our live trade room. We talk about this in our training sessions. We know the highest percentage trades occur when there's a new trend. Now, maybe you've studied Elliott wave before. Maybe you've studied some of the ABCDs. Maybe you've studied wave patterns in the past. We know that after 2, 3, 4, 5, this will be now wave number 6. After our 6th wave here on crude oil, guys, this has been trending for almost a lifetime for crude oil's sake, right? When it comes to crude oil futures, this is one of the longest trends you're going to get. So we look at this and we go, okay, this trend is most likely exhausted. It could keep going, but we know that the highest percentage trades are going to come when the trend changes. So for example, you can see here yesterday morning, and this is what got us selling short aggressively yesterday. Remember we talked about this yesterday morning on our news, or yesterday afternoon in the newsletter. We talked about this new higher high, and this new higher high that we made yesterday morning collapsed and then failed. When it failed, again, there's your new trend develop. So the new trend develops now. We get wave number 1, 2, 3, 4. The list keeps going on. 5 and 6. We're about to get the 7th wave right now. We're in danger zone territory, right? This is oversold. Right now, we know that we'd like to buy here, right? If you recall, that 60-minute chart told us we'd like to be a buyer here right now. So in all reality, what I have to work with is I'm going to be looking at swing high to swing low. We're looking at buying opportunities now all the way up to this first yellow box, 106.51. Right? So buying opportunities in the short term up to 106.51. I'm not going to be quite interested in buying any higher than that. What I'm going to have to do is I'm going to have to wait to get a new higher high here, and then we're going to start taking off here to the upside. So be aware, it's going to take a little bit of effort here to get us going higher. Looking at some faster time frames, you can see we have just crossed here now to being bearish, from being bearish to bullish. So we do have short-term buying opportunities setting up right now. I'm looking to get in long here, 106.10. Looking to get long here, 106.10 with a stop at 106.05. And I have projected targets up here at 106.51. All right, we'll have targets. And again, this will adjust. This is a much faster time frame. But I am bullish at this time on crude, and I will be looking to buy pullbacks. I've got now the trend has changed from the bears to the bulls, and I will now look for price to hit my enter zone, right, my trigger zone. I will take one profit target off at 106.30. I will take a final profit target off at 106.51. Now, if this does go higher before pulling back, this will be a little bit higher, and I will adjust this to slightly higher as well. This is our standard wave pattern, members. This should not be unfamiliar to you guys. And again, we'll begin trading this morning as of 8 a.m. Eastern Time. All righty. So I'm seeing no major news today until 4:30 Eastern Time. I'm seeing an extended downtrend, right? 6, 7 waves on our entry charts. I'm thinking it's best to wait for a reversal. We've got the reversal. Now I'm seeing short-term buying opportunities. And the biggest reason why is because of that 60-minute anchor chart. But as always, I'm only one person's opinion. I'm always anxious to see what Marty's seeing on the trading floor there of the NYMEX. Let's see how Marty's doing out there on the NYMEX exchange. Marty, how's the sentiment out there this morning? Is there a lot of people in the pit this morning? Are people using this no news day as a lack of interest? What do you see, my man?
Good morning to you, JJ. So across the board, I'm kind of just looking at a little bit of a pullback here across the board. I really wouldn't consider it a downtrend yet, just a pullback. Of course, we're going to have to watch a couple levels to really kind of get a really firm idea of the selling coming into play. So what we're going to do is we're going to take a quick look at our usual suspects this morning. So what I got for you guys here is, as JJ was saying, not a hell of a lot of news. We have a little bit of 10 o'clock news. That isn't really too important, the Richmond Fed Manufacturing Index, and then again, that 9 o'clock news. So we'll keep an eye on it. Again, it could be a potential market mover in respect to the dollar, right, and that risk-on sentiment. But right now, that risk-on sentiment, I'm going to have to put a check mark next to it. So we see crude trading a little bit lower this morning. We have the dollar trading a bit higher, right? We have the euro a little bit lower. So we could kind of say that the risk-on sentiment could fully indeed kind of come into play today, as it was kind of not really in play on the crude yesterday, right? Okay, so I have your RBOB, I have your heating oil, I have all of our majors here just pretty much sideways this morning. Okay, that's right, that's RBOB here, SEP, RBOB, SEP heating oil, and SEP crude all trading sideways to slightly lower. Volatility still holding steady and firm. Our spreads, that's the Brent to WTI spread, kind of widening out just a bit. Remember, the spread was at parity the other day when we were at 0, and now we're looking at just about 175 on the spread, as we are widening out just a bit, which is a little bearish, right? Counter spreads also holding steady firm, widening out just a bit, and that Brent crude trading now down to 108. So you can kind of see across the board we are looking a little bit lower. So let's look at a couple charts real quickly, and then we'll take a look at some levels. So you can see we break below our support zone, and now we're coming into some more support. Again, I got 105.95, which is going to act as a little bit of support. You can see we bounced off it, right? I got 105.30 and 104.78 for some buying opportunities, some levels of support that we can kind of reach down to in the next couple hours possibly. Again, if we get back above those 106.90s, that would get us back within the range from Friday, and we could possibly trade back a little bit higher. But again, we're going to have to really watch this little sideways type of trading range here between, right, 106 and 107. That's going to be a little sideways, I believe, around there. So if we happen to test one of these outer extremes, say we happen to go test a 107, we could possibly look for selling opportunities, right, as we kind of trade within that 107 to 106 range. And if we happen to fall below the 105.93, I'm going to be a seller down to the 105.40s or possibly even 104.80. So that's kind of how I'm watching the market. Again, we saw in the pit a lot of profit taking yesterday from the paper. Paper was doing nothing but selling, right? We saw locals pretty much flat-sided, two-sided. It was tough to get a good read on the locals. You can kind of see a little bit of a bearish wedge that we've created in the overnight session, as we're kind of breaching the higher end of that 106.50, right? So we were buying those 105.90s, remember? Right, we were buying those 106 evens, and we were able to get back up into that little bearish channel and now trade a little bit higher. So that's taking a look at a couple time frames here. Overall, as I mentioned, the trend is just a little bit lower, but starting to firm up just a bit across the board in all of our products. Again, crude, RBOB, heating oil, they all trade in the same pit, so the markets tend to follow each other. Those spreads are important to keep an eye on as well, right? When the spreads tighten up, bullish. When they widen out, it's bearish. Right now they're all wide, so that is a bit bearish at the moment. Alrighty, let's take a quick look at your natural gas. As you can see, natural gas traded toward the lower end of our wedge, right? And now we got about halfway back up in this little zone here. You can see we touched the 372, and then we started selling those 372s, and I believe we could sell back to about 364, right? 364 even. That's going to be the lower end of our wedge. We're going to be trying to buy that lower end of the wedge. Okay, so if we break below the 364s, then we're going to be looking for buying opportunities here at 360 even half and 355. Okay, that's what we're going to be doing. We're going to try to buy those lows where they're going to trade lower, back down towards the lower end of our channel. So first 364, then we're going to be looking to buy 360 half and 355. That's going to be the deal here on your natural gas. Alrighty, so let's take a quick look at our levels here real quickly this morning. Again, I'd like to take a quick look at the levels here for you, as the levels are starting to line up pretty nicely with crude here today. Again, if you look with me real quickly, you'll see open interest is rising, right? Open interest is rising. We got about 391,322 in open interest, so that's always just a little actually bearish, again, showing that some shorts are in the market, right? So there's no hiding the fact of some shorts entering the market. Yesterday, as I mentioned, we had nothing but paper selling, and it was very substantial in terms of just the size associated with the trade, right? We saw a lot of them come in during the opening bell. We saw a lot on the closing bell. So it was very significant in terms of just the paper selling yesterday. And, man, retail really dominated the market yesterday, the paper. All right. Looking at your levels now, we have pit session high from yesterday at 108.60, which is going to be the higher end of our range. Our pit session low from yesterday is going to be at 106.55, right? We're trading just below that pit session low from yesterday. So that's kind of interesting to keep an eye on. We closed and settled the market here at 106.84 yesterday. What's 106.84? Today your daily pivot's going to be at 107.33, which we are trading well below by about a full $1 right now. Again, below that 107.33 daily pivot. Resistance up above, I got 108.01, 109.38, I got 110.23, and 111.43. Again, I added that 110.23 in there, so if it's not with the calculation, don't get confused. It's just another level that I added in there. I wanted an extra one in there. So, alrighty, guys, support down below. What I got for you guys here is right here. I got 106.06, right? That's going to be our first level. I got 105.30, which is really close to that 105.38 level that I had, right? And then we have 103.23. So, again, these are going to be your levels here for some support that we can find some buying opportunities on, right? So that's what we're going to be looking for, at least in terms of just the pit session levels, what we're going to be interested in buying. If you will, just take a quick look with me here, guys, at your volatility. Holding steady and firm, the OVX closed and sells a day at 24.80. So you can see vol still holding firm right now in the implied volatility before our opening. We have just volatility about 24 to 25% in implied volatility. So vol still holding firm. If vol starts to decrease and trade a little bit lower, we could then see a lot of activity. So in the options, we were watching some increased activity in that 105 put, 103, 195 put. Again, we saw a little bit of downside and upside still in the 108, 110, 112, and 120. Keep in mind right here at this level that we're at right now, about the 106 even and the 106.50, right? 106 half, 106 even. There is a little bit of a on skew right now. Puts are firm, and the calls are a little weak at the moment. So puts are very firm, and again, they are showing a little bit of interest in the downside at the moment, around this 106 half and the 106 even. But really, we want to try to exercise that buying opportunity as we kind of trade a little bit lower, as we saw in the charts earlier. All right. Real quickly, let's rock and roll over to our natural gas at the moment here and take a look at those levels, as we are looking for selling. Well, we're looking for downside activity, and we're going to try to buy those lows of this channel, of this wedge, of this range, right? So we are going to be looking for natural gas to trade lower. First down to 364. If we happen to break below 364, then we're going to be looking to buy the 360 half. And if that does not hold, then we're going to be looking to buy the 355s, because those are going to be the lower ends of our ranges as we trade within range from yesterday, possibly as well. Okay, pit session high from yesterday, 370.40 in the natural gas. Your low, right, 364. 364, there you go. That's going to be your low. It's going to be the level that we're going to try to buy. And close to settlement number yesterday is going to be at 367.70. Ladies and gentlemen, 367.40 is going to be your daily pivot today, with some resistance up above at 370.80, 373.80, and 380.20. That's going to be our ultimate highs of the range. Support down below, what I have for you here is going to be 364.40, which was going to be our first buying opportunity. Also yesterday's low, right? 361. We can even call it 360 even as well, just 10 ticks away from that, 360. Then what I have for you guys is going to be 355, right? 355, 354.60. Those are all going to be our buying opportunities here today on your natural gas. So once again, ladies and gentlemen, that's going to be it for me here. I'm going to throw it back over to JJ in Los Angeles. As you see here, ready to rock and roll here on a Tuesday with inventory number coming out tonight, APIs. We're going to be watching that, and I'll have commentary for you guys on that tomorrow morning.
Marty, thank you so much, my friend. So 4:30, it sounds like we're both on the same page here this morning. We've got some buying opportunities coming our way in both markets, crude oil and natural gas. Exciting day in front of us here this morning, guys. Anything can happen today with no major news. It's a summertime day, so we always remind us to get in early and get out early. And it's about 8 o'clock Eastern time right now, so it's time for us to wrap up this call with you guys. Miles, great to have you here today as well. Thank you so much for your questions. Guys, I'll be looking at the API numbers this afternoon at 4:30 p.m. Eastern time with Marty, and we'll come back and join you guys here tomorrow morning at 7:30 a.m. Eastern time. We're seeing short-term buying opportunities here across the board. Looking forward to getting your feedback. Don't forget to send us your feedback. I'm JJ at School of Trade. That was Marty over there at Traders Audio. Don't forget to log in and go see Marty and his partner Jeffrey every morning at 8:50 a.m. at Traders Audio. And come out and join me anytime, Monday through Friday at 8 a.m. in our live trade room at School of Trade. We're on a 23-hour and 30-minute break, guys. Enjoy the rest of your day. Have a wonderful Tuesday. And, of course, don't forget to learn this stuff so you can earn this stuff. We'll see you guys here tomorrow for a Wednesday edition, get a hump day edition of our morning prep. Have a great day out there. Happy trading. Adios, amigos. Bye-bye for now.